Hello, everyone, and welcome to the Finance Magnets Virtual Summit. I'm Ben, the founder of Crypto Jungle, the leading Israeli educational platform, and also the blockchain lead at Market Across, the leading PR agency in the crypto space. I'm excited today to be here with this fine gentleman and to be talking about the state of the crypto nation. We'll be covering a lot of topics from COVID's impact on the industry, regulation, and where the market is headed. So why don't we begin with some introduction, starting with Josh, Alex, Miko, and then David.
Sure. Thank you, Ben. Great to be here. So my name's Josh Goodbody. I'm the Director of Growth for Binance. I'm based in London. I look after the EMEA business for Binance and work across a number of different products. So excited to be here. I'm very keen to dive into details later on.
Great. Alex Baden, founder and CEO of Trustology, a UK-based custodian wallet provider, predominantly serving folks in the kind of institutional investor space, hedge funds and so on, and brokers. So based out of London and looking forward to this conversation. Thank you.
David?
Yeah, hi. Sorry about that. I'm David Olson. I'm VP for Europe and Asia, and also run distribution for BlockFi's institutional services business. BlockFi is a fintech and lender. For retail clients, we offer the ability to place crypto with us, earn interest, and trade. On the institutional side, we operate a lending business where we finance participants in that market.
Nice. Miko, you want to take it next?
Sure. My name's Miko. I'm a co-founder with the Evercoin non-custodial wallet and exchange. It's a mobile product, as well as I'm a general partner with Gumi Cryptos Capital, or GCC, which is a venture fund, and we invest in early stage blockchain and cryptographic asset startups.
Nice. And the stage is yours, Alon.
Yeah, hi guys. I'm Alon Gorin. I'm one of the founders of a venture studio and now fund called Draper Gorin Home. We invest in early stage blockchain and crypto startups. I also am one of the founders of a conference called LA Blockchain Summit, which is one of the largest blockchain conferences in the world.
Awesome.
Yeah.
All right. So we'll go right through it. So it's been obvious by now that the crypto markets behaved pretty well during this COVID crisis. And this recent month has really gotten us a lot of mainstream attention. Do you believe that this is actually the beginning of a new bull cycle with increasing demand and filling it in your businesses as well? Or do you see this more as a temporary trend as a result of mostly monetary and fiscal policies and everything that we're seeing due to COVID? Miko, why don't we start?
Sure. So I'd love to first of all just say, why can't it be both? A recent study actually indicated that about 5,000 of the 11,000 S&P is coming from QE, right? So the thing that's happening is that this kind of QE pump that's happening under this economic policy is really just lifting everything, and it's lifting things that are bad and it's lifting things that are good, right? So things that just make no sense and probably are zombie companies, and so like that affects everything, right? So obviously, that's affecting Bitcoin and it's giving it some positivity, right? But at the same time, I think the people in the panel are probably going to indicate the other day, I keep hearing news about PayPal. The other day I opened PayPal and there it is, like Bitcoin sitting in there, like it's real, it's live, at least it's live in my geography. So like, that's another 300 million piled on top. Obviously we're seeing kind of CeFi effects, David's going to talk about BlockFi. I'm advising with Celsius. Like CeFi is doing beautifully well. DeFi, Alon will probably talk about DeFi is doing beautifully well. So like, I don't want to stretch it out, but like, for sure, there's like some absolutely fundamental effects. And if you just look at the Bitcoin chart, you zoom out, like the chart will speak for itself. Like just zoom out, just look at the chart.
Yeah. Josh, you have something to add?
Yeah, sure. No, I fully agree with that. You know, Mika hit the nail on the head in that, you know, this is almost the perfect storm of scenarios and events that are all leading us down the road towards Bitcoin adoption. And some may be temporary and some may be longer lasting. On the longer lasting front, things like increased adoption within large non-crypto companies like PayPal and the like, and continuing, you know, focus on Bitcoin as an asset class in companies like Square, really kind of sets the scene for Bitcoin to start, you know, shining and doing what it does best, operating as, you know, an asset that behaves fundamentally different to other assets in many cases. But of course, you would be negligent to ignore the overall wider macroeconomic environment, which, you know, is pretty unprecedented in many ways. That we're seeing huge amounts of you know, fiscal stimulus being pumped into the economy, governments buying up, you know, bonds left, right, and center. You know, this is unprecedented economic times we're in. And when these things happen, naturally people will look to other asset classes to find some kind of safe haven, or even find some kind of return when cash no longer is doing what cash used to do. At least preserving its value is what it used to do, let alone giving you interest in your bank. So Bitcoin is really, you know, favoring or getting into a more favorable place in this regard, because it looks like an asset that people can invest in, can allocate in, has day-to-day utility. And the fascinating thing is we're right at the very beginning of this, what I would call cycle, this bull cycle that we have at the moment. Whether this cycle lasts for another 6 months or another 3 years is yet to be seen. But the fundamentals of adoption are clearly there, and they're increasing day in, day out.
Absolutely. David?
Yeah, I totally agree with what Miko said. And I think Bitcoin's very unique in that, so if we step back and you look at technology, and obviously the NASDAQ having a huge run up, and digitalization being an overriding theme, and you know, and I guess the place where, you know, where cash has flown in the time of COVID, Bitcoin checks that box because it represents digital money and a brand new technology. And also, and then on the other side, it also fits into the theme of central banks printing money, helicopter money, QE. So you've ticked both of the boxes in this macro environment with one very simple, easy to invest in instrument that now you can use, as you know, as Miko said, PayPal, and soon to be WhatsApp and other ways. So so I think, you know, and obviously from a corporate perspective, BlockFi is deep into crypto, and that's why we exist. That's a raison d'etre. So so yeah, just, you know, strong yes on both fronts.
Alex, let's move on to you.
I mean, first of all, great points by everyone. Probably kind of where I can add some thoughts, it's around really the macro effect. I think the long-term fundamental pressure is going to be in two areas. One is weaponization of finance, and the second one is quantitative easing. What do I mean by weaponization of finance? Internationally, people are now starting to use clearing and settlement of dollars or whatever it is as a way to punish certain international behavior or potentially impact ability to do trades. We've seen the reaction from Middle East through to Russia and India moving away from USD because they don't want to be sanctioned by US, especially when there is a very aggressive foreign policy. So on the international scene, and kind of some countries will choose potentially not to continue with traditional reserve currencies. Something like Bitcoin gives us a really good access to an alternative. And then the second one is, like we mentioned, quantitative easing. But why is quantitative easing bad? Well, essentially, you have an issuer, especially if you're holding, I don't know, USD and GBP. If you're kind of an individual in Sweden or whatever, your value is going down if you're holding USD and you're not getting any of the quantitative easing benefits of the issuer. So there's kind of asymmetric benefit, especially to holding foreign currencies. So between those two things, the more international we get, the more we're going to be unwilling to let another country with no clear rule of law in an international space deciding how they allow you to use their currency, which is sensible, and then also the impact of quantitative easing. So between those two things, I think we're going to see more and more move towards something like Bitcoin, where there isn't those risks. So for me, it's the international space. It's really, really important.
Great inputs. Alon?
Yeah, I mean, there's not much I can add on the analysis side from what this amazing group has said, but what I will say is that to the common person, this is correlated to our industry. This is wonderful, right? This is like the gateway in. This is sucking people into going, wow, even if it's a temporary FOMO of people talking about Bitcoin or talking about the crypto space, a certain percentage of the people are going to go to your site, Ben. They're going to learn more about blockchain and crypto. They're going to get educated, and they're going to stick with it, right? So, you know, like when the internet blew up, there's me and my brothers became computer nerds, and then some of our friends didn't, right? But that's okay. But those people went to sort of the next part of the industry. And when everything crashed, you know, the looky-loos went away, and the goofballs left, and the sort of you know, profiteers. I'm saying that in a negative way. That's not necessarily negative, but a lot of the you know, those fly-by-night people went away, and that was great. That was great for the industry. That's what happened in you know, 2017, 2018. The market crashed, and who was at the crypto conference after that? We had the biggest, most epic conference we ever had, and then the next conference was much smaller. But who was left behind? Miko was still there. You guys were still there. And guess what? 2 years later, we're still here, right? And we have something to show for it. And that's what's going to happen again and again in these cycles. Hopefully it happens less dramatically, but I would ask Miko about that question more than I'd ask me, because I just like early stage startups. If it's a cool startup, I'm investing. You know, like the comment that Miko said about, you know, the runs help even the crappy companies, right? But the good ones will still live on beyond you know, the next cycle. So I love it. I think any attention to this space is great. And like you said, we're still super early. You know, I joked yesterday. I said, I think I said, you know, the industry is still in its diapers. So.
Yep, we're definitely at the early stages, and there's always, I don't know if it's true for you as much as it is for me, but there's always this trade-off or this balance that we gotta have in our emotions between this is good for Bitcoin in the industry, but this is also bad for the world.
Well,
at least in the short term.
I think Bitcoin in the industry is only good for the world, and the more people in the world learn about it, the better it is. Maybe in the short term for different economies, it could be bad, but I think that the only economies it could be bad for are maybe the ones that are artificially pumped. And, you know, I'm in the United States, maybe can see that, you know, it may not be good for the banking system or something like that here, and it could shake things up, and maybe it wouldn't be good in the short term. But I want to live in a borderless global world where everybody has opportunities, not just us. So I'm willing to take the hit short term.
I totally got you on that. So let's move on to the next question. And it's more specific to your own businesses and specific to how COVID impacted it. So what I'm more interested in is now COVID a major factor in your decision-making for strategic long-term decisions? How does it factor in? Has it changed a lot internally? Let's start with David on that. You're on mute, David.
Thank you, Ben. So it's an interesting one, because from, as I just related from a macro perspective, I think it's in a weird way, it's given us a really strong boost, or given the overall industry a strong boost, as you see interest in cryptocurrencies, you know, skyrocket as a result of those macro themes, and also people sitting at home, the kind of Robinhood effect, where people have more, they're no longer traveling 45 minutes each day or commuting 45 minutes They're bored, they're trading, they're investing, they're watching the markets, including cryptocurrencies. So that's definitely benefited us as well. I think then from a micro perspective, it's made expansion a bit, I think, bit more difficult. It's given us the impetus to expand, but it's made expansion more difficult in the sense that we're hiring people without any face-to-face interviews. You have to get people trained up over Zoom, where normally you'd have an embedding process where they come to an office and they meet everybody. We've hired people internationally. We've probably doubled as a company since the COVID outbreak started. So somehow we've managed to do it, but it takes a lot more, kind of like person hours to make that happen, and it's a lot more effort, burning eyeballs to do that. But we've managed, and I think it's been a good, kind of a good overall experience as a company to try and navigate this environment.
Awesome. Alex?
Sure. I think on a very practical level, again, that kind of team bonding is interesting because, we've gone full remote. We hired people too, now fully remote, it works. But Zoom and other tools are very digital in the sense it's on or off. You miss out on that background chatter that you do in the office. So just like David said, I think you have to engineer that kind of backroom chatter and learn new ways of doing it. So that's this kind of the minor hit kind of change that you have to deal with. But actually at a macro level again, and I'm just kind of filling in those bits, COVID has demonstrated how much we don't have resiliency to some extent in our environment, and the need for resiliency. What do I mean by that? Yeah, if, for instance, I was trying to go on holiday, COVID just started, we sent off a passport just before the whole thing happened. And the physical passport was in an office where no one was there. So we had to cancel our holiday because we simply nobody was there to take the goddamn passport and stamp it, essentially. So, and then we see also other examples. If too many people get ill, there's a particular data center, one location, whatever it is, where let's say maybe most of the data is stored. You have pretty brittle systems at that point. Now compare and contrast that to something like even Bitcoin, 100,000 nodes. The resiliency is just phenomenal. So I think one of the things that we haven't as an industry talked about yet is the resiliency. It is by far superior to anything else. So I do think as an industry, we need to make people aware of that, because I think it is one of the massive benefits of what blockchain brings.
Definitely, I agree. Miko, go ahead. And I also want to hear more about strategic long-term decision-making within your organization. How do you feel like it has affected that, other than hiring people, as in plans, long-term plans?
Yeah, I mean, I think one of the things that I think we all kind of are skirting a little bit is, this so-called K-shape economy, right? So one of the things that we're all kind of insulated from in this group is very much kind of the digital divide, right? And we're very much kind of insulated from, obviously the lower leg of the K, right? So, in a sense, like what's happened with COVID in the phenomenon is in some sense an acceleration of digitization. Obviously the war on cash, right? The physical cash is obviously a disease vector, and it's also, a lot of commerce has moved into digital and online, right? So if you kind of look at this from a scenario planning perspective, the macro definitely lends itself towards reasoning about this as a kind of an ongoing phenomenon. So, I think in terms of macro planning, this shift is, I think, there are so many things that aren't coming back the way they were. So, I think that's something that's fairly real. Vaccine or no, right? And obviously what's happened recently is that this vaccine news has kind of priced into the markets. But, I think from a local perspective, I just wanted to comment that, the exchange and wallet, the self-custody business is actually doing pretty well. I think record amounts of Bitcoin are coming off of custodial services and onto non-custodial services. I'm not sure how to attribute that, but that's just something that we're seeing. I think on the investment business, I think Alon will probably also possibly agree that that gets a little harder, right? Not having, I mean, if you're talking about interviewing people for, BlockFi, it's very similar to interviewing CEOs for investment, right? Which is, in some ways, I've been leaning into my past relationships quite a bit. And, we have been making investments. We've been shifting around doing maybe more reinvestment and, investing in the existing portfolio really as a function of trust. But, of course, the door is still open for shiny, brand new, we never met them before entrepreneurs. And, we're obviously still doing that.
Awesome. Alon, you want to take the next one?
Yeah, I mean, I agree with Miko on that. We did, by nature, I guess, going to the original point of what Miko was saying with the K-shaped stuff is we're a digital industry. So, we're not as affected, right? So in the negative way of how COVID is affecting a lot of people, we have a conference, for example. We, were really, really bummed and really disappointed that we wouldn't be able to have a real in-person conference this year. And we sort of flipped that to make it towards our advantage. There was lots of people who could never participate in the in-person event. One, because they're on the other side of the world, and it's too expensive, so we could educate more people. Or, when it came to speakers at the event, a lot of government-style speakers could not accept a flight from us to Los Angeles, for example. So they could only speak at a conference in Los Angeles if they were already in Los Angeles, which basically meant no people from the government or the SEC or the OCC or anything like that could participate in the past. But this year they could all participate because it was virtual. And so we had, the highest caliber speakers of that sense, right? I don't think any of them are as cool as Steve Wozniak when we had him in person, but it's we got to have the people that for our industry is important, whether you agree with them or not. We have to know how they feel and what they're doing, and it was very, very exciting. On the sense of new portfolio companies and things like that too, it's affected us, right? So we don't get to meet those people in person and have those conversations, but we've made investments pre-COVID in companies we never met in person before. And we did it during COVID too. It's not the norm though. And we've definitely, if I take a step back and look at the deals we're doing, they're almost all either previous relationships or somehow connected to other portfolio companies we already had. So exactly what Miko is saying, he's seeing as well. So, but we, COVID has created crazy, wonderful opportunities for this industry. And it's a little bit, it's a double-edged sword, right? Because on one hand, we can see the benefits, but we can also see what's happening in sort of the main streets of the world with COVID kind of killing businesses. So I'm hoping we can shift that towards education and opportunities for the rest of the world. And that's sort of where if we're thinking anything different long-term, which we're trying not to, because I hope and think this is a short-term issue we're dealing with in the big scheme of life. And we have to be a few years ahead anyway. I'm hoping we don't change too much, but when it comes to some of the strategies and ideas that we're doing, they're always been pure digital, but even focused more on getting everyone to participate. And let's use this opportunity, like we said at the beginning, where if people are going to flood in because they have more time, because they don't have a job, because they're working from home, so they're on the computer all day, or for reasons like that, let's use this to get adoption to the next level and hopefully accelerate the trajectory of what our industry was already going to do.
For sure, I agree. Josh, why don't you give us the Binance perspective?
Sure, yeah. I think from a macro perspective, our overall strategy hasn't changed. We, very much have seen an uptick in business along with the wider crypto ecosystem during this COVID period. And I think that has forced us to change in the respect that we have to build even quicker than we were previously building. The space is changing so quickly, and products are being released to market and are booming and dying in kind of equal pace, that we have accelerated a number of long-term plans that we've had as a company. One example of that is trying to take our very much global company local. So building small teams in local places to be able to build local businesses or capitalize on local market growth. And doing that in an environment where you can't travel, where you can't sit down face to face with people and interview them, as some of the panelists have said, where you very much have to go on gut instinct that you garner over a Zoom meeting or Skype. It's challenging, but nonetheless, you know, one example, January, we were 800 people. As of today, we're over 1,500. We've done all of that hiring virtually, more or less. I mean, there are some cases where, you know, someone's been in Europe and I've been able to go and see them, and similar occurrences in other regions. But we've been able to scale up our company with some pretty great talent in the midst of this kind of travel ban and all the various hurdles that we all have to jump through to meet people face to face and to travel anywhere. So global expansion, we've proved to ourselves, is possible in a remote first environment, and very much at our core as a company, we've always been all about being able to operate in a remote environment. That has almost, during the COVID period, battle tested us even further. We are confident that we're able to operate in this decentralized way very, very well. But that brings challenges, and challenges related to things like, you know, how do you incentivize your team and build a company culture when the majority of people are remote? How do you connect create lasting relationships between teams and members of staff when they've never met each other? So there are these hurdles that we see at a company culture level that we're navigating in different ways. We don't have all the answers yet, but we're very much hoping that at some point early next year, we'll move from this you know, purely virtual environment that we're into a more physical environment where elements of travel come back, commonsensical travel, conferences, meeting people, meeting business partners. But one thing that has really been encouraging for us is we've been able to do a lot of what we previously did remotely, whether that's hiring, whether that's investing in companies, whether that's, you know, building products and services. We've all been able to do that remotely. So I wouldn't say at a fundamental level, COVID has changed the way that we see our business evolving, but what it has done is meant that we've had to adapt to, you know, some of these structural difficulties in a smarter way. So in a way, it's almost been like a bit of a battle testing period for us in future-proofing our business should this ever occur again. But it's been a useful exercise for everyone, I think, and we've come out stronger for it.
That's for sure. All right, so let's take the regulation path. So we know that this year there's been a lot of regulatory advancements, including enforcement actions. Especially what we've seen recently was the BitMEX CFTC issues, and we had the KuCoin Act, and then there's the OKX still ongoing situation with the frozen withdrawals, which essentially all these scandals means that we're not there yet in terms of actually being able to be compliant with what's the norm with regulators. What are your thoughts on that, on where we stand with regulators? Which advancement from your perspective was the most important one so far and you see as an important going forward? Why don't we start with Alon this time?
Sure. So I'll leave, you know, some of those exchange issues to maybe Josh or Miko who know those better than me. But I'll at a high level in relation to those, I will say that it's that, you know, I feel like the regulators are doing an excellent job pitching us why DeFi is so freaking important. And why custodial exchanges are scary as hell for anyone to participate in. And still, I mean, most of the people affected are all of our friends and the biggest crypto nerds and things like that. So the mainstream folks haven't been affected quite yet, because I don't know any of my friends from high school who are participating in crypto using OKX or you know, BitMEX or something like that. They're all on Coinbase or BlockFi or Celsius and stuff like that with their crypto. So, you know, that said, I think that, you know, all of the news and anything around that is just, you know, teaching people better sort of etiquette, or I don't know what the right term is for how they deal with their crypto. You know, if you're going to use an exchange, take it off the exchange, or how about this? Just use decentralized exchanges. You know, I think the negative aspects of DEXs outweigh the positive aspects of centralized exchanges for the most part. And maybe that's because I am a nerd for it and I'm leaning that direction, but that's just my personal feelings. Regulation wise, I think one of the most exciting things, because I look at the industry as a total sort of dichotomy, or at least like my strategy is, there's the DeFi side, which I'm very heavily into, very behind a bunch of companies and been in it for a couple of years now, plus, and more than that, probably 3 years plus. I am a huge fan of it, right? I'm a huge fan of decentralized everything and completely circumventing regulation where you can. That said, I'm an American citizen and I can't participate in a lot of those things because I have a family and I have kids and I want to do what's right. And sometimes what's right might be illegal and I can't participate, right? So on the other side, I think it's really important to support the regulated side of the industry. You know, some of you guys will be talking about it from an exchange perspective, but I think about it from a digital securities perspective. If you look at the United States alone, and this is an old number, with inflation and stuff, it's probably much higher. It's a $7 trillion alternative investment market annually in the United States alone. If all of that is digitized on the blockchain, which it will be in the next 5 to 10 years, hopefully sooner, that's a whole huge industry in itself. And it makes perfect sense, right? The CEO of NASDAQ says that all of their stocks will be digitized and on the blockchain at some point. So if you think about that, that's huge. And so if we look at regulation that's changed to make that available, it hasn't really quite yet, except for early stage startups. So just now they announced that they are finally changing Reg CF, which is the crowdfunding regulations, to allow startups to raise up to $5 million. In a Reg CF raise. And I've been on the record for years, and I was attributed as one of the people who helped create the Jobs Act or whatever, which I really wasn't. I was just there at the time. But I was there yelling at everyone saying, this is bullshit, this is not enough. Because I felt like you were hobbling startups. Like, to raise $1 million, you now had to have a certain level of audited financials, which is minimal, but at the time wasn't automated and was too complicated and too expensive for a startup that raised $1 million to comply with. Now, the fact that they've raised it to $5 million is more meaningful. The fact that a lot of the automated or a lot of the accounting practices can be automated and made really easily is exciting. So now with very minimal cost, a startup will be able to raise up to $5 million publicly. So the reason why this is important is because it's public. You know, before we could raise as much as we want, and we still can, but it's only because I know Miko and I go, hey, Miko, I want to pitch Gumi, and or somebody comes and pitches me. But my friends and family and people on the internet couldn't participate. And that was insane. Like, that felt like it was un-American, and it is, right? Like, the whole point of this country is to get your community together and build something and innovate and create. So that's exciting for me that regulation has changed. I still think there's a way to go for fixing it, but I think that combined with digitizing the shares of the company, making it easier to trade, will, a year from now, 2 years from now, once like the lockup periods and the certain things happen, will create a secondary market for legal DeFi products, right? Like, or at least, you know, somewhere in between, like the BlockFi and the Celsius of the world called CeFi. You know, there's going to be somewhere in between where you can go on Republic or Shares Post or one of these companies, raise a few $1 million for your startup from the community in a way that the government has given a stamp of approval saying this is kosher. And that's exciting because, you know, not everyone is going to be as insane as some of our friends and just go out there and launch a token, which they shouldn't be, right? Like, it's not for everyone. And just because we know and believe that certain people are doing things according to the spirit of the law doesn't mean it's the letter of the law. And we'll find out from the government over the next few months or few years which ones of our friends you know, pushed the envelope too far.
Super interesting.
I think it's an exciting opportunity.
Yeah. Alex, you want to take it from the London perspective? You're on mute.
Indeed. Somebody has to invent something to fix that. I guess kind of the biggest European development in terms of regulation has been the Fifth Aml Directive, originally issued by the European Union, adopted into legislation across Europe. One of the things I think that Europe has missed was to make that passportable. So for those who don't know EU regulation, some regulation is passportable, which means if you get the license, I don't know, in UK, it works across the entire European Union. So e-money is one of those. And then some of the regulation isn't passportable, meaning that you have to, it's the same law, but you have to apply state by state. So, or country by country. So that's, I think Europe missed an opportunity there. Obviously with UK exiting European Union, it's irrelevant. But the full weight of money laundering has come down in Europe on crypto. So I am back into what I used to do back in the banks and spending a very large percentage of my time as a custodian wallet provider doing compliance. We kind of going through the registration process and so on. So I think it's the right thing. It makes a lot of sense. I also think what's unique about crypto is that it still gives you a viable alternative to cash. If you go to France, there's still a huge amount of resistance, for instance, towards e-bank or e-money because it's fully controlled and everything is known by the state. So a lot of people still like cash because they have a cultural adversity towards the government knowing everything you do. They like cash. They don't want to do anything wrong. They just don't want the government to know what the hell you do. And I think that's actually a very legitimate case. So a lot of people, for instance, when I talk to them, when they hear that I'm into Bitcoin or Ethereum, they love it. They're like, great. Does that mean that I can have the convenience of digital without the kind of the risk of digital? And basically the answer is yes. So I think longer term, we will see kind of this kind of mixed mode where on the lower side, where cash resides today, it's going to continue to be non-custodial. It's going to continue to be kind of cash-like. And I think that's wonderful. At the same time, I think as especially institutions come into this space, then I think you will see more and more custodial wallets. And this may evolve. Right now, there's all sorts of permutations around that. But in the end, somebody has to do compliance checks, which means somebody has to oversee the transactions, which also somebody means has to provide that service, whether that's going to be by keeping keys or by writing smart contracts, depending on the blockchain, different ways to solve that. But we will see this kind of regulated and unregulated channels. We've seen also evolution of kind of private blockchains for the more regulated space and public chains for unregulated space. I'm going to make a call on this one. I think that is going to disappear. We're already starting to see kind of people creating different solutions on public blockchains with Ethereum. Nexus Mutual has whitelisting for KYC'd individuals. Oddly enough, Nexus tokens can be wrapped to be unregulated and wrapped to be regulated. I can see, for instance, and we talked to a number of our clients who are now starting to ponder, what does it mean? Can we create, let's say you're doing Uniswap. One of the problems with Uniswap, which a lot of people are very excited about as an automated market maker, is as an institutional regulated entity, you want to take liquidity from that, potentially, it's a nice source. But of course, it's a pool of funds. And that pool of funds may contain some funds that are legit, some are not. So, what's the stance? Should you be able to use Uniswap or not? It's very difficult. But what if you turn it around a little bit? What if we create wrapping services and we wrap Ether, but with a regulated layer on top? Now you can have a liquidity pool for wrapped regulated Ether. And therefore, at that point, when you're buying this, swapping, that you're swapping regulated tokens. Now you solve the problem without having to create a brand new chain. So I think there is going to be kind of really interesting kind of projects coming out, because with this idea of wrapping tokens, regulated wrappers and unregulated wrappers, we've got a way forward to use the same infrastructure, but for different use cases. So I think this is really an area that I'm particularly excited because big fan of DeFi. You know, Trustology, we're probably one of the very few custodians, if not the only ones, that supports DeFi as a custodial wallet. And then we can enforce firewall rules, protocol-specific notifications, all those other kind of capabilities. So a lot of institutional players coming to us. We've been really kind of, because yield farming is taken off, and you know, when it's your money, non-custodial wallet makes a lot of sense. When it's somebody else's money you're managing, you have asymmetric risk. You're an asset manager on 50, 60 grand. Do you want to really be personally liable for 10 million? Hell no. And if you do, then you probably shouldn't. No, I wouldn't be trusting you with my money.
Yeah.
So you know, there are very different kind of requirements here. So in the institutional space, custody makes a lot more sense. Regulation is a must. But creating a hybrid solution on public blockchain is where I think there's going to be a lot of really cool stuff. And actually, if you're interested in that space, come and talk to us. We are kind of trying to gather a lot of opinion in this space.
For sure.
I think it's really exciting.
So David, I want to hear your inputs on that as well. And then I have some an exciting question about institutional investors as a whole.
I've got something to say on the reg thing too, so.
Sure thing.
Okay. Excellent. Sure. On regulation, I think that back to your original question, that the single biggest thing in my mind that happened this year was when the OCC approved banks to hold crypto in the US, because up until the time, actually Bitcoin was regulated by the CFTC. Not many people knew that in the US, but it was, or it still is. But then the OCC opening the door for you know, the likes of, you know, Northern Trust or State Street or others to be able to hold crypto, JP Morgan to be able to hold crypto, suddenly then created a space for people that were on the borderline. So fintechs, maybe like PayPal, to come into crypto. I think that we'll see what happens with with regulation in the U.S. It seems like that no matter what happens no matter which way the election would have went, I think that we were in a pro-crypto sort of trend. Europe seems to be a bit of a different story so far. Obviously we had the crypto ban in the UK, which wasn't great for the industry, but we can debate that. And then just in terms of what Alon said about decentralized exchanges and DeFi, at BlockFi, we want to support all sort of innovation in crypto. So we're actually a member of the Chicago DeFi Alliance. There's still some question marks in my mind about how do you get institutional adoption of DeFi, and the whole the KYC and giving an infrastructure that a pension fund could invest into comfortably. And giving, and it's just that, for example, BlockFi, what we get happen almost every day now. A family office calls up and says, we want to buy our first $1 million or $2 million of Bitcoin. How do we do it? And we have to give them very high touch service. So having that investor move into DeFi, I think is going to take another, 5 to 10 years at least. So anyway, I'm just saying there's enough space, I think, in this growing asset class for CeFi and DeFi.
Awesome. Miko, let's hear your input.
Yeah, I'll try to keep it brief because a lot of good things have been said, but I just can't keep quiet about something that I think the space broadly doesn't necessarily reason terribly well about, particularly from a historical perspective, right? Which is that I think that people look at things like the ICO boom for kind of a trail map of regulator behavior, and I think that's a mistake. And the reason why it's a mistake is because the regulators in this case of things like BitMEX are actually different regulators that reason about things fundamentally different, right? So, people talk a lot about the SEC. They talk a lot about US citizenship. They talk a lot about sort of decentralized versus centralized. They talk about the Howey test. I can tell you that in the case of AML, which is some of the stuff that's come up in this conversation, that stuff doesn't matter, right? So the thing that I think is important to understand is that, if you think about who's involved in the BitMEX case, like we're talking about, FBI, we're talking about OFAC, we're talking about FinCEN, and it's all Bank Secrecy Act, right? So, you know, I think that people aren't reasoning terribly well about that because, you know, if you want to, if the US wants to invoke extraterritorial jurisdiction, just look at BitMEX, right? It's like they did pick up the CTO in Massachusetts where he lives, but like rest of the principals, Hong Kong, like wherever they are, like, you know, the arm is much longer. So, you know, I just wanted to point out that, like, you know, it's a different set of regulators. They're the ones with the guns, you know, and I think that, you know, AML and KYC are a completely orthogonal topic. And I think DeFi isn't the answer to that. DeFi is not, it's not like, okay, well, we'll just do DeFi and we'll hang out in unregulated space. It's not, that's not your decision. Like, you know, it's not like, oh,
Yeah.
I like it better in deregulated, so I'm just going to stay in deregulated. That's not, you don't get to decide. Right. I may or may not like this stuff. I'm just telling you what regulators are thinking, and they're not thinking geography matters, and they're not thinking decentralization matters. They're not thinking about those things. They're thinking about terrorist financing. They're thinking about criminals,
Yeah.
and they're thinking about going after the criminals with the guns. So that's what I
Great
think.
input. All right, so we'll start with you on this one, Josh. But the crypto industry as a whole loves to talk about institutional money pouring in, and it was recently Raul Pal who said that a giant wall of institutional money is coming in when he courageously predicted $1 million per Bitcoin by 2025. We have great variety of perspective here on this panel, so I'd like to hear from you guys, and this would probably be the last question of the panel. What is happening behind the scenes when it comes to institutional demand? Are we seeing that wall of money coming in? What should we expect? And more specifically, to hear it from your expertise. So like Alon and VC, the VC perspective and the non-custodial one. And Josh, let's start with you.
Sure. Yeah, I think institutional adoption is a key theme that we've seen this year. And as with anything, there's various sums of the part that create this wave of adoption. And I think calling it a wave isn't hyperbole. It's not an exaggeration. It's actively happening, and it's a wave because a small amount of institutional money coming into the Bitcoin space is a large amount of money for the Bitcoin overall market cap. So for the Bitcoin market cap, it is certainly a wave of incoming money. Now, one of the key drivers behind that is regulation. We've touched on that topic just now. And regulation is, albeit something that people don't like to hear about because it's not very sexy, it's not fashionable view. Regulation is a bit of an enabler, and it helps catalyze institutions that have regulatory obligations, that have fiduciary obligations in some cases. It helps enable them to get into the space. So regulation has been an enabler in that regard. Now, as we see the overall market, we have seen approximately a 20% quarter-on-quarter rise in our institutional client base. And that is a theme that we've seen from mid-2019 onwards. So a pretty significant influx of institutional clients coming on board of different types, of course. When I say institutional, I'm also including corporates within that, some of which, of course, are hedge funds and prop shops. But we've seen an overall trend towards institutional market participants really entering the crypto space in significant numbers. And that has an impact in many areas of the crypto space. From our perspective, it's meant that we've had to continue increasing the sophistication of our technology and our products and services. We've had to look at things that are boring, that we don't talk about that much, but are so important, like market data, providing really sophisticated market data tools so these more sophisticated players have the tools they need to be able to enter this market, being able to articulate what our regulatory roadmap is in certain jurisdictions. These are the kind of questions that institutions ask exchanges. What are you doing in these jurisdictions? What is your plan to be compliant in ABC jurisdiction? What is your overall, for example, custody framework? How do you battle test your systems and controls? So the influx of institutional money coming in has kind of dragged, I would say, the better actors up and basically got them to think long and hard about how they're future-proofing their business, because institutions are coming, and we're right at the beginning of that, hopefully what will continue to be a wave of incoming money. Now, as regulation continues to develop, so with that comes the increasing appetite from a risk perspective of these institutions to allocate more funds in the crypto asset markets. So from a business perspective, we are very much building from a long-term view. We think that this isn't a short-term, market orientated event. This is very much a long-term trend that's going to continue. And we very much see ourselves as being a key component within that in providing, for example, a marketplace and exchange to be able to provide, market access and liquidity to exchanges. So it is a key theme. It is certainly going to grow and grow this year, we think. And, we very much see the pie growing, and it's certainly a positive outlook from us.
Awesome. David.
So on the theme of institutional investments, I think that it's good, kind of good timing. In the last probably 2 months, we've seen more interest from kind of big name institutional investors than we've ever seen before. We're having conversations with I would say with just about, I don't know, everybody that you could name that would be tangential to, to crypto and also in the traditional world. So, I think we're at the kind of the phase of, moving in from like kind of innovators into early adoption and hopefully early majority. And at least on the institutional side of BlockFi, that's what, we're betting on. I think that certainly from the less regulated kind of investment vehicles like family offices, as I mentioned before, that's already happening. They're already allocating. We've had conversations with and seen real investment from family offices that own gold mines and saying, actually, you know what, we think actually Bitcoin might be the next gold-like vehicle that we should be investing in. And they're not necessarily setting up mining rigs themselves, but they're buying Bitcoin. Yeah.
Awesome. Alex, you want to give us your inputs?
Yeah, it's interesting kind of, I'm clearly much more institutional focused given the fact that my background and what we offer. Part of me slightly laments the fact that if it becomes too institutional, we kind of lose what we tried to do with kind of DeFi and stuff like that, P2P. So there's a little part of me thinks, can we not be too institutional? But that part of me that likes a wage. So I guess with that preamble, what we have seen is a steady evolution. So for instance, pretty much all of our clients are now either brokers or kind of smaller exchanges or kind of funds. So we pretty much don't have any kind of individuals. The custody space for the individuals just doesn't work out. So I think there's clearly a trend towards that. And the other thing we have seen more and more is that the first wave were the people who quit kind of traditional financial institutions and set up mini crypto institutional kind of solutions. So we started to see sophistication of people coming in, but it wasn't traditional kind of companies allocating a bit of the asset. It was people from those backgrounds moving in and demanding more what they used to, but allocating a majority of their capital. So that was an interesting move. We're now starting to see more traditional ones allocating a small percentage of the assets, so that transition. The other thing that we have seen, and this is kind of, we made a bit of an early bet on the fact that, you will need institutional crypto custody with full range of APIs to support kind of withdrawals, deposits, and do that cheaply and at scale with resiliency and compliance. So kind of where we do really well nowadays is kind of people using us as the infrastructure layer. So brokers increasingly move from only allowing you to funds trading in fiat and take out in fiat. Nowadays, pretty much all of them are coming to us and going, We want to be able to take deposits and manage withdrawals of our clients in segregated keys with a custodian wallet. So that evolution has really propelled kind of use of custodial wallet platforms like ours to manage at scale large number of addresses, webhook callbacks, all the stuff that you need to do to manage it at scale cheaply. So I think that's really exciting to us. And I think the second wave is going to be, as I said, institutionalizing DeFi. And that isn't just about kind of compliance, it's also thinking about strategies. You know, some of our clients are now talking to us about yield-bearing trading deposits. So auto sweeps to Compound, you know, or whatever, Aave or BlockFi. That's all great stuff. But the thing is, depending on the cost of gas, actually with a low margin yield deposit address, you might be running out of money, or you might actually want to have smart contract insurance. So people are starting to innovate and going, well, I actually want to have Nexus Mutual to cover the risk of the contract, plus custodial insurance for assets under key, but also I want to be smart as to when I execute my sweep transactions to interest-bearing protocols, because I want to make sure that I'm not paying too much gas. And that level of sophistication, where if you're doing it once, twice a day, it doesn't matter. You do it 100 times a day, every day, those costs add up, and you need to be able to manage to account for and include those variables in your strategies. So yeah, really exciting there.
For sure, we're also probably going to see some more interoperability solutions and more scale coming in. So that's going to help out with that as well. Alon, you want to take it from the VC or early stage perspective?
Sure. Yeah. I mean, anybody who's been in this space for a few years has probably seen the cycle, and we've been talking about, you know, the institutional money is coming for years now. I do though feel like it is. We actually are at an inflection point, and from a VC world perspective, I've seen it for a while now. So doing our own stuff at Draper Goren Home, I was a venture partner at a fund. And then I helped them create a crypto fund. And so I've been in this space now for years, at least on the investor side. And I remember going to events, like traditional VC style events that I've been going to for years in LA. And I remember sort of the same group of people going from one year to another, where the first year they were like, what the hell is this guy talking about? He's out of his mind. Blockchain, Bitcoin, like they hadn't heard of Bitcoin. And if they did, it was just ridiculous. Like they were like, this is stupid, right? Like just complete dismissal. And then the next year you'd come and they'd look at you, they're like, oh, you're still doing that blockchain thing? Like, oh, that's cute, you know, like that's nice. Like, oh, like this crazy kid is still crazy. And then the next year they're like, so you're still doing it, huh? Like a little more interested, but a little, you know, okay. To cut to today, where if, you know, right pre-COVID, I went to one of those conferences, and I remember it was striking to me because I walked it. It's a conference in LA called the Recurring Revenue Conference. It's ran by a friend of mine. Great guys, great people. And I started running into the same VCs who thought I was insane a few years ago, or who last year thought it was cute or whatever. And then kind of lean in and be like, so you're still doing the blockchain stuff, right? Yeah. Any good new deals? What are you in today? Like, what are you looking at? Like, and to now, even in COVID, getting emails from those same people saying, I'm doing this deal, you know, I'm doing that deal, or what deals are you in? We're interested. So, and that isn't necessarily because they're interested. I think it is. I think they're getting it and understanding it, but it also means their LPs, the investors who invest in their funds, are asking them like, what percentage are you going into crypto? Because they're seeing the hedge fund space, you know, those traditional family offices and people like that are getting research saying they should put 1, 2, 3, 4% of their funds into Bitcoin. And so the funds that they're investing in, they're asking those partners, those people, so what percentage is going into blockchain stuff? So it's trickling down, and it's getting exciting. And I think that it's you know, I hope and I feel like we're at an inflection point. But like I said, we've been talking about institutional money is coming for years, and yeah. I think, I mean, you can see there's examples of it, like, you know, you know, I think Miko might have even more, because I think that Gumi is a part of a larger group, right, and a more institutional group. So they're way ahead of the curve.
Let's hear it from Rico.
Yeah, I mean, I would say this, right, is, Bill Miller is in, like, it's Druckenmiller's in, like, obviously Paul Tudor Jones is in, so these kind of like classical institutional folks are actually starting to signal on behalf of what Mike Novogratz calls the herd, right? The herd, in his view, is institutional. But I kind of want to wrap it up by saying, why can't it be both, right? So instead of lamenting like, oh, like it has to be institutional versus retail, like retail is here at the same time, right? It is the perfect storm. So, we are seeing things on both sides.
For sure. I saw the other day an article that it's spot volumes that are driving the prices in the last few months. Anyways, guys, I want to thank you and I want to thank our viewers. It's been really great to host you today at the Finance Magnets Virtual Summit. Very interesting inputs. And have a great evening.
Thank you.
Thank you.
Thank you.
Thanks,
Thank you,
man.
guys.
Thank you. Great to meet everybody.